start looking at the markets from a 3-week look back perspective and see where we are inside of this market maker buy model, because clearly that's what we're trading inside of. The smart money reversal, the low risk buy inside of a fair value gap, 50% of the range, right over here. The market eventually from the low risk buy entry, closing above the range, right? So creating a new range, and eventually led to the first stage of accumulation, which is this week's low, the SMT below Monday's low, right? The open. Nasdaq makes a new low. ES fails to make a new low. So first stage of accumulation that now led us inside where we are currently entering inside of Friday, which is the second stage of accumulation and the final distribution. Key liquidity pools inside of the range. There was first an intermediate term high, which is a daily breaker, which is the swing high related to the Trump event in pre-market. The market has expanded through this buy side, but there's a daily market structure shift here. Expanding into the 3-week look back high, consolidating around it, retracing in the range, right? Retracing around the 2 to 2.5 level of the standard deviation, right? The final shakeout. And so far is looking like it's breaking above the range, right? We're probably going to see another close above the range. So if for whatever reason the market were to come back to these, right, inside of the range, inside of the fair value gap, before any of these highs are rated, that can provide a potential good long. All depending on the profile of day, obviously. Right, could look like a consolidation, maybe there's something like this. There can be an SMT with ES here inside of the gap. That can be a possibility. It's probably going to be Nasdaq that's going to fail to come back to it because ES currently is still not trading above the range. On the other hand, if an SMT were to get created around this range, right, this is a pretty sensitive range in here because we're trading in premium, we're trading inside of an old phase of high resistance. It might get choppy as we trade inside of these levels. A lot of quote unquote resistance over here, right? The buy side liquidity, which is the previous month's high, and then finally the range high, which is the long-term high. This is a daily intermediate term high, which is a lower time frame long-term high, which was related to the Nvidia earnings. It was the market rallied after market, and then the next day opened down, and from there traded lower, and since then that's been the high of the range. If we look at the perspective of a 3-day look back now, so a lower time frame perspective, well, first of all, clearly we can see the weekly profile here, which is a Tuesday low of week profile, so a classic buy week. I mean, it is still interesting to look at potential TGIF levels. Well, the range isn't set yet, so this might keep expanding. Alright, so looking at the TGIF levels of the range, once eventually the range will be set, whenever the high of day will form, these could be potential good targets to see a retracement on the weekly closure, all depending on obviously how high the market will be before it starts getting to these levels, if it starts getting to these levels. Because for all it matters, the trend right now is bullish, and maybe it doesn't need at the moment to come back to these levels, right? It's the final stage of distribution of this market maker buy model, with the high of the range being, you know, in terms of ticks, being 1,700 ticks. I mean, it's a large range, but clearly the market, I mean, this week's range was what already? Over 5,000 ticks. It's rare we usually do, or we see at least one that's Already 5,000 is a large range. Could be. I'm not sure. I mean, I want to keep trading long until the market proves me otherwise. Right, which could be a divergence around of these highs at a key time of day related to either CPI or the opening range. Right, because if the market keeps trading higher here, we're going to get a premium opening range gap. Right, so from there, will the market want to gap down, fully close it? We'll see in time based on the profile. You can see that in between at around 25% of the range, of the weekly range, once the high will be set. Right, there's clean lows at the range. There's obviously an unfilled fair value gap, which will become a daily fair value gap, or I believe it is already. Yeah, it is already a fair value gap. So the upper quadrant of the fair value gap, essentially. Now, if we look at a 3-day look back, see where we are in the range. It's the weekly profile. Right, since Tuesday low, expansion, reaccumulation, and now we're seeing another phase of expansion. If we look at the previous day's range, which is this range highlighted, what we can see is that there's a fair value gap right at 50% of the range. So far, this fair value gap %50 of the fair value gap hasn't been filled yet. Right, and there's also a mitigation block, a rejection block cutting through this fair value gap. So if for whatever reason the market were to retrace to these levels and then break structure as a continuation, that can be a good trade. Or if the opposite were to happen, a reversal, once the market were to trade in here and you're still bearish, you can look for the reactions around the quadrants, right, and see how it trades. Say if you're this would be from an intraday perspective, like a 5-minute or a 1-minute perspective, as it trades inside of this fair value gap. See where it bounces, and if the profile of the day is bearish, I say it happens something like, say for whatever reason the market is going to expand here and then reverse, right? There could be an SMT here, something like a 1, 2, 3, reverse, and then come back in this range. Well, first of all, at what time does it come back in this range? Right, is it in London? Well, then it's probable that the market will continue to trade higher, eventually, at least until New York. And then if the market is still bearish at that point, there could be a shakeout related to CPI or the opening range, and then a reversal. That can be a possibility. The idea is not that it will come back to it, but it's more if it comes back to it, right? Because looking to buy at these levels is a bit too premium. Right, at the worst case, it would be at least an entry up until this fair value gap. But I'm saying if for whatever reason it were to come back inside of this fair value gap, may not happen today, it may happen only Monday. Right, this is a good area for buys. At least until it trades up to the final drawn liquidity, which is the Nvidia earnings long-term high. If we look at a daily chart, well, you can see the market maker buy model, the low risk buy, the first stage, right inside of the wick of the low risk buy. From there, gapping up, breaking structure, right, creating a daily breaker. So this is the first discount array of interest. The second discount array of interest would be obviously this fair value gap, right? The fair value gap that cuts through the range. If for whatever reason the market were to come back to it, this would be a good area for high probable buys. Right, say once, because if we look at the daily range, right, this is the daily long-term high. This was the lower time frame in long-term high. Right, so it's a daily intermediate term high. That's what I was saying. This is an intermediate term high, the long-term high. So maybe as the market trades in premium, eventually either finds a consolidation phase, right? Once this current market maker buy model that we're in, since we're in the second phase of distribution, it's likely, in my opinion, to end around 75% of the range or so, more or less, a couple, I don't know, 100 points, because there's a that's where there's the premium arrays of the range, which is the order block. So if we look at the order block of the range, this is the order block of the daily long-term high. We can see that the market hasn't tested 50% of it yet. And also what's interesting is that there's also another order block that cuts through right through 50% of it. So once the market does get to these levels above the buy side liquidity, that's when we'll have to see how does it start trading. Does it leave fair value gaps behind around this range? If it does so, how does it treat them when it comes back to it? Or if not, does it range, take out the high, and then starts coming back to this? Because I'm not sure yet if this will be a breakaway gap. It could be if another fair value gap is created, say inside of this range. Say today expand and Monday consolidates, that would likely create a fair value gap somewhere around the low of the bearish order block and the lower quadrant of it. And then from there the market could touch 50%, manipulate into it, and then continue trading higher, leaving this as a breakaway gap. But I need to wait for the confirmation first, in my opinion. So discount arrays, premium arrays. If we're to look at where the market is trading inside of right now, right, because we saw where we came from, where we're currently heading into. Now if we zoom in from, or at least look at the daily perspective of where the market is currently trading inside of. The market is trading inside of this specific rejection block, which is the high of an order block also. So likely, very likely price will be sensitive around the quadrants of this PD rate, because that's where it's trading at the moment. Right, we're trading inside of this old range. Resting above it, there's obviously buy side liquidity and the targets we talked about before. Now if you look at the hourly, the high of Wednesday coming at the low of it, the market coming back inside the range, created a divergence at the fair value gap in the range with the S&P 500. Then I believe it created another one at these levels. That's a final divergence inside of the range. So yesterday's profile was a bit of an unusual one. This is the range to expansion profile. It doesn't happen often. But I guess this is a good example of it. So yeah, Wednesday making the high there. Previous day, sorry. No, sorry, previous day is over here. So 2 days ago. Wednesday's high, then retracing, and then yesterday's high also coming near it, right in between the lower quadrant and the low of it. Right, and at the moment now price has created a fair value gap inside of the range, and it's testing the upper quadrant of it. So we have to wait and see how London will trade, how CPI will deliver also. We have a couple fair value gaps of importance. If this gets broken, then we have this one. We'll all see where New York is in the range, around which PD rate it's trading at, and how it's respecting 50% of that PD rate. Right, at the moment it's trading here. For all that matters, this starts consolidating, and then London spikes into it and rejects, and we trade lower from there. Anything's possible. We'll see in the moment.